We can talk during this time.
All right.
Good deal.
What's the protocol?
Hi, everyone. We're allowing everyone some time to get logged in, and we will get started in just a minute. Now, we usually talk about what you're drinking. What are you sipping?
Water. And one of my daughter's 50,000 Stanleys that we have because one just won't do.
I have this Yeti from, look at the logo.
Ah,
Black Knight. Like this is an old one.
it is an old Yeti. It's like a
It came
smaller
from a
top part of.
TMC. Yeah, it came from the TMC conference.
Oh yeah, we've got so I opened my pantry door the other day to get my daughter a water bottle to fill up. And I mean, we've got Yetis, we've got Stanleys, we've got Awalas, I mean, you name it. And it's how many of these things do we need?
Yeah.
Yeah, right. We redid our kitchen last year and we purged a lot, but then I also created like this, I don't know, special way to like manage them all. So a bunch of them are on their side in one area, and then there's some standing up that we use daily, but it's
Um,
a little much.
One of my pet peeves is taking the my Yeti lids for non-Yeti tumblers. Like, no, like it says Yeti, and your tumbler clearly is not a Yet. Like you can't
That
mismatch.
sounds exactly like something I would get upset about.
Well, then you can't. You go to take a Yeti to do something, and you don't have like the sliding lid. And it's like, where are kids?
Right.
Uh,
And you're always in a hurry, I feel like, when you're grabbing a Yeti, like you're on the
Yeah,
go, so you need it
yeah.
right away. Yeah.
yeah,
Right. And it's
mine is
usually
also
like bourbon, so I don't want to spill it.
it's especially if you're taking it to a sporting event with your child. You're like, yeah, you don't need to know what's in this cup.
Exactly.
It's Friday at 5. Don't judge me.
Or as Amy
Um,
just said with the straw issue, like you can't find the one that's tall enough for the particular Stanley or Yeti that you have, right?
Yeah.
it's all a thing. Like they all should somehow be attached so that they can't be separated. But anyway, we probably should get started. So welcome everyone to the SIP, where we're talking about SIPs from Yeti, Stanleys, and the various devices we all have to hydrate. A space where conversation sparks connection, collaboration, inspires innovation, and industry leaders gather to tackle today's biggest challenges. Think of catching up over coffee or an adult beverage and insights on the industry moving forward. So I want to say a special thank you for all of you for joining us. This is a very busy time of year with back to school, and month end seems like it's always going on this day and age. So thank you for joining us. And today's episode is proudly sponsored by Down Payment Resource, the nation's only down payment assistance database, housing over 5,550 down payment assistance programs. I got goosebumps reading that from some post-traumatic stress. Uh, Presenting Down Payment Resources, Brad Cardwell, the VP of Sales and Business Development, and joining Brad is Derek Walton, the SVP of Secondary and oversees cap markets, vendor management, and investor relationships of Bank South. So welcome to you both.
Thank
Thanks for
you.
having us.
Appreciate it.
All right, it's going to be a very fast 27 minutes, so let's go ahead and dive in. Brad, for those who might not be familiar with Down Payment Resource, give us an elevator pitch. What's the mission behind your company and what solutions do you offer and what pain points are you solving for lenders today?
Yeah, thank you. Appreciate that. Officially, our mission statement is to help our business partners connect home buyers with the down payment assistance they need. So that's what we have on our slides and everything. I think, a higher level, our mission is really to help make homeownership more accessible by connecting people to down payment assistance programs. So that's just everyone, right? What a lot of folks don't realize is that there's thousands of programs out there. Just a brief correction, 2,500. I think you said 5,500, but it's 2,500 plus programs.
It was
Which
2,550.
2,550. Yeah, there you go.
Yeah,
That's it. Yep.
who knows
So
what
it
I
sounds like
said?
you need to get to work. Brad gets more programs on
Yeah,
there.
right. We are every day. It's Every demo each week there's always more when we're talking. So, but there's so many programs, but the challenge is just awareness and how to actually operationalize those inside of a lender's business. So that's where we come in, right? We integrate directly into a lender's workflow. Whether that's through the LOS, tools for loan officers, consumer facing portals, and we automatically match borrowers with programs they qualify for. So the problem we're solving is twofold, right? So one, most buyers, even loan officers, just don't know these programs exist. And two, um, you know, they just it's hard for lenders to just work with the DPAs into their processes without adding extra friction. So we take that complexity off their plate so that they can generate more leads, close more loans, serve more first-time and underserved borrowers. And at the end of the day, we feel good about that. We're helping people get into homes and at the same time helping lenders grow their business and make affordability something that they can use as a competitive advantage.
I was recalling, I think it's homes.com where they're putting up the number of visitors to their website. And it says you have
Okay.
to go get more numbers. So we,
Oh,
we
that's
need to
fun.
just say an over
Right.
2,500 to make sure that Brad doesn't have to run and get more numbers to
Yeah,
pop up
right.
there. Derek, let's bring you into the conversation. Tell us a bit about your background, your role at Bank South, and give us a snapshot of who Bank South is in today's lending landscape.
All right. I have been in this industry since 2004, and apparently I'm a glutton for punishment because I'm still here. But now I started as a processor setup and then kind of worked my way through. I ended up on a lock desk in about 2007, so right before things got really exciting. And I've been in secondary and cap markets ever since. Bank South, I've been here for about 13 years, and we are based out of Atlanta. We're a wholly owned sub of Bank South, which is a community bank out of Greensboro, Georgia. And we're 100% retail and pretty much kind of do it all. We'll do about $1 billion a year. Would love to do some more, and that's kind of where Brad. Hopefully, those guys will come in and help. But that's us. We're small and like to be able to have white glove service and that trusted advisor type feel. But then at the same time, utilize tech, utilize things like down payment resource to run with some of the bigger boys and be able to scale and move a little bit faster. So that's
Yep.
us.
Awesome. Now, many of the people who are listening have heard me say this, but I'm a self-proclaimed recovering lender. So mortgage lending is in my DNA, but definitely I do not miss the chaos and the juggling of dozens of down payment assistance programs and the tug of war between ops and sales and capital markets every time we try to roll out a new product. So Brad, let's get into the nuts and bolts. What exactly does down payment resource do to help lenders navigate the maze of down payment assistance program? Just walk us through how it works in practice.
Yeah, appreciate that. So, I mean, really, the engine behind kind of what we do is our one of a kind national database. So we house almost every single down payment assistance program that exists, and the key is that we keep those up to date, so the lender doesn't have to. We built processes and relationships with providers across the country. So, like when guidelines change or a program suspended, funds run out, we know about it and we alert the lender right away. So, you might ask, like, why does that matter? So, most shops, um, the loan officer might bring a new DBA to a manager, then someone in product, ops, secondary has to dig up info about that program. They research it. That can take hours. And if you miss a nuance, miss a detail, it's buried like on the provider's site, you're going to run into headaches, underwriting, closing, others. And so we just take all that guesswork off the table. So instead of spreadsheets, which most lenders use to manually update and pass around these things to different departments, we give lenders a single platform with a unique view so that loan officers, underwriters, processors, closers, whomever, everyone that's working there has one single source of truth. So when a program changes, nobody has to chase it down. We push updates to them, a brand new feature we just released about a month ago, which is very exciting. Our customers are loving that. And so in practice, we're basically, helping lenders expand their DPA footprint with confidence, and navigate new markets faster when they're opening up a new market, and keeping everyone in sync, reducing friction.
How much time can lenders save and what other returns on investment are you seeing for your clients?
Yeah, so actually, it's funny. We're getting ready to do a campaign around this. We just got back surveys from our current customers, and on average, between researching a program, finding a program, maybe having to find the data to put into your LOS, put into your PPE, give materials for trainers, um, the annual maintenance. We are being told from our providers that from our customers that they are saving 12 to 20 hours per program per year. So, if somebody has 50 programs, or our customers have many more, 500, 600 programs. I mean, you can imagine the number of full-time employees that would take to really do justice and keep things up to date. And that's really where a lot of our customers find the ROI. They're finding it in the risk, cost to cures, all different types of things there.
Yeah, amazing. Derek, every show needs a juicy story, and yours is a great one. So, Bank South once broke up with down payment resource, but clearly you've rekindled the relationship. What led to the split? And more importantly, what brought you back?
Well, I mean, I
Day,
wouldn't necessarily say it was,
days, days of
salacious or
our
anything.
lives. Here,
This
here.
isn't I don't think this is a new Netflix, script, but with us, it was really a timing thing on the first go round. So we, coming into the pandemic, just what we were originating shifted so much, just kind of due to the environment. We were finding ourselves not doing very many DPA programs, and really more just your standard conforming stuff, as the agencies were pretty much the only buyers then. So it was one of those things where it wasn't, no concerns, no issues. It was just, we felt like where we were and what we were originating, we knew the DPA providers, and so it was kind of all hands were on deck with the craziness of 2020 and 2021, and just trying to close as many loans as you could. That has, somewhat shifted now. I mean, obviously volumes are very different and we're in a different environment, but we are also trying to grow, and we're trying to grow geographically. And so I think one of the things that down payment resource does for us, and was one of the main reasons why we wanted to re-engage, was this is going to help us cut down the time of learning these DPA products in areas where we are not familiar. And I think that, to Brad's point earlier about the time that you can save, I'm the one that does a lot of this stuff. And so it saves a ton of time being able to look at a product and know that, okay, we can do this, we can't do this, this is what it requires for us to get approval, this is what it doesn't require, this, and that kind of, once we dug into it more. And then also what he'll touch on, I'm sure here a little bit, is the Encompass portion of it, was another a big positive, and another thing that said, let's jump back in.
Absolutely. And lenders are always looking for ways to boost revenue and win more deals. When there are fewer deals, it's more important than ever to make sure that there are programs that the borrowers fit into so that you can get that market share. But Brad, what's the unique lead generation opportunity, you mentioned it in the opening, that DPR brings to the table?
Yeah. So we have this consumer facing tool, and the lender puts it on their website. So it could be on a loan officer's landing page. It could be, uh, I guess, marketing campaigns. And basically, a consumer can click on that. They can get matched to programs that they qualify for. And, those are not, I'm going to call them not cold leads. Yet it is, but it's not. I mean, we find and we hear every day that these consumers are highly engaged and highly motivated. So they may be really early in the process, but they want to speak to someone. And so we call these sticky leads, right? It's a term we use in the industry. And once they've seen that they qualify for like real money, like there's real cash available, potentially free cash, maybe forgivable, et cetera, they don't want to start over somewhere else. They are trusting this advisor to help them. And so that's great for the lender, but another piece of that is it also opens the door for co-marketing. So a loan officer can partner with a realtor or a builder, and they can use down payment resource to capture DPA leads. And those leads funnel right back to the loan officer. And so you're generating more leads, you're creating, stronger referral relationships, you're expanding your reach. So at the end of the day, it's really, let's not just compete on rates alone. Let's really talk about how we can help with affordability, attract, serious buyers, and, talk about this as being also a revenue engine, not just your big efficiency and time savings play and risk piece as well.
I would envision it too being able to help with second looks. So if you have a borrower who, for whatever reason, they went and bought a car or they went and did something in the loan process and you go to verify their assets at the end and they don't have enough assets. I would imagine that lenders could go to down payment resource, look to see if maybe they missed a product that the borrower, maybe no one cared to look along the way because they thought they had it covered, but use it as a second look tool as well to make sure that you're capturing some of those would-be declined borrowers.
Yeah, and that's actually a big piece, and I won't talk about it a whole lot, but just for Encompass, that's a big piece there because you're in Encompass. The underwriter has all the conditions that we've pre-written for them, and something falls out, right? Price changes, the appraisal came back, or income changes is probably more like it, and we live monitor that data within Encompass. So it's going to alert the underwriter that they no longer qualify. And then you back out into your main screen and it still lists all the programs that still might be available. And so a processor, loan officer, underwriter, whomever can do that second look and they can find potentially another product that would help them and save the deal.
Yeah, and if you want consistency, you have to automate it for people. So I love that you have the ability to go right into that and basically say, "Hey, look over here.
Right.
You may have a solution."
Yeah, it's a game changer
Awesome.
for sure.
Derek, all of the tools and features that DPR offers, which one gets the most traction at Bank South? And on the flip side, what do you think is the most underutilized feature that lenders might be sleeping on?
I guess the most traction will definitely be the ability to work in Encompass and utilize the tool on a live loan with actual borrower data. That's one of the, I think what we've gotten the most positive feedback for so far, in the early run of being on the program is that, they're in the Smith file and they look at the data in the Smith file and they can automatically see, all right, well, these 4 DPA providers give me what I need, or, to what Brad was saying, or this one doesn't, the income changed on this one. It's easy for them to respond to help the borrower get ultimately qualified to get the funds that they need to buy the home, and they can do it in the live file so they can see it, they have the real data, and it's not just a guess. I think one of the things that may be not utilized as much, or really that I've enjoyed, is in the directory. So not necessarily on the side that the loan officer sees initially. We can go in and upload and add our own overlays. We can add notes. We can add comments. We can answer questions that we always get on DPAs, and all these things can be. I think and Brad, correct me if I'm wrong. I think click the little button for LO portal, and it goes into the portal. And so when they're looking through these things, it can say, here's the, maybe the minimum FICO on this is 600, but we want it to be a 640. It's our overlay. Put that in there. How much can I charge the borrower? Well, 1% max, 2% max, questions like those. That helps us cut down on the time as well that individuals are asking questions. And then, ultimately gets us an answer to the borrower faster, and hopefully gets us a closed loan faster for them.
Yeah. And it sounds like that. I mean, yes, you have to give the instruction and communicate what you want, but you're communicating that once, as opposed to if you have 200 loan officers potentially asking the exact same question. So I imagine, in addition to the days that are saved, you also have a significant time savings from Derek, you having to email underwriters and loan officers and processors back about what exactly the features are of a loan or what the overlays are of a loan.
Yeah, I mean
Frequently.
the system on our side, so on the directory side that we see, it the amount of data that's in there is incredible. I mean, it answers every question you could possibly need to know. What it takes to get approval, what, if you need to be certain channels, I mean, all kinds of stuff. So the amount of time it takes to weed things out, make the right choice, get started on approvals, it's just shrunk immensely.
Yeah. I imagine too with the condition piece of it, it probably saves you some. I remember the down payment assistance programs that were assignments of mortgage and getting MERS registered on them and then having to rewind after closing to go back to the assignment. So I imagine that you see that detail as well.
Yeah, it really it makes everything a lot smoother. We can close these loans faster, we get borrowers and homes faster, and do it the right way.
Yeah. Awesome, less friction. Brad, you work with some of the biggest names in lending, and you're a familiar face on the conference circuit, leaving for NAMBA tomorrow. What's
Yep.
the typical aha moment that gets lenders to say we need to be a part of down payment resource?
How much time do we have? There's a lot.
We have 9 minutes,
My-
so let
uh,
it
I'll keep it brief. There's so many stories. I would say that a few big pieces are one, um, you know, it allows us so the lender would say this, it allows us to be proactive versus reactive in the DPA space. So allow more opportunities for borrowers, sales teams, referral partners, et cetera. Um, so you're telling me that so DPA gives me all the tools I need for the borrowers so they understand what they're getting, for the sales teams, for the operations teams. So we don't have to add full-time employees to fulfill all these steps and support all of this. Um, I guess another one is because I collected a few of these that I'd come from some notes from some customers recently. Really reducing the number of errors in the system. So we are touching these programs all the time. We are committed to touching at least once every 30 days or more often, depending as something runs out of funds or something changes and we're alerted to that. But we're always doing that outreach. Typically, lenders will tell me that we're lucky if they touch the program once a year or they update their Excel spreadsheet once a year. So if we're doing that all the time, it just reduces those errors. And a lender doesn't have the manpower to do this the right way, right? Or reduce the risk and things like that. So that's probably some of the biggest pieces. And then the only other aha moment really is we're doing a brand new piece. We're going to be advertising soon and inviting more lenders to do a decline loan analysis with us. So give us all your decline loans for a period of time. We have a way to assess all of them based on the DPAs you would want to participate in. And on average, you'll see our stats typically we find in the country, it's about 31% of all decline loans from a lender we find could have been salvaged if they would have known about these DPA programs. We've done many recently, and it's going from like 38 to over 40% that they're finding that could have been saved. Can we save
Yeah.
all of them? No. But if a lender could grab 10% of a couple thousand loans,
Yeah.
I mean, that could be some serious money, so.
Right. And also building deeper relationships with your referral partners to be able to do more loans and make them happy without having to do a bunch of jumping around to find out that there was a program that they didn't know about.
Yeah,
So,
yeah, exactly. You're helping the community, you're helping capture new buyers and relationships and saving deals and helping people, get in that home. You save the day. So they're going to remember you for that, especially when I don't know, looking at my clock here for when the refi boom starts, but that'll be helpful for that.
coming. It's
It's coming.
coming.
Don't hold your breath.
Come on, Derek, just a mini boom.
Hey, I will take it. Come it, bring it.
Derek, I'm not sure if Bank South participated in the most recent Pulse of the Network survey, but our network's top 3 of 5 most critical issues or objective to round out 2025. And as they're looking into 2026 is implementing technology into our evaluating tech stack, business development opportunities to grow volume and market share, and then creative ways to drive more revenue and execute on the secondary market. What's the most important issue that Bank South faces today and is looking to solve going into 2026?
I mean, I think that the tech part of it is, you know, is probably number one, and probably number one for most everybody. I mean, the bottom line is, digital, 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 AI. How fast can you go? That's a big part here. We have multiple projects and, in the hopper for, AI, for agents, for originator assistance, how to underwrite, loans quicker in the system, how to reduce touch points of yeah, I guess humans, if we're being honest. But I think that how you do that, keep it within a decent spend number, and you're not just going crazy. But then also, we're really big on that, on the white glove, on our loan officers and our production staff. Being hands on, being the trusted advisor. How do you do that? And also be able to have all the best technology and to scale and to be able to give you a mortgage as quickly as possible. That's probably number one. From a secondary standpoint, I think there are a few things you do. Delivery times on the back end. How quickly can you get a loan funded and to an investor? The faster that you can do that, the shorter bid times you can get in. You pick up a bit here or there. If you can get from a 7 day down to a 3, or from a 15 to a 7, you're picking up money there. From kind of thinking outside the box, doing odd terms on originations. Hey, you have someone that bought a place on a 30-year fix. They've been in it for a few years. They want to do a refinance. You don't have to go back to the 30 and give up that 3 years, do a 27-year, or so that those types of things. I think also just having every kind of niche product you can throw out there. It may not necessarily get you the loan on that product, but it gets the loan officer the call. It gets them, the foot in the door. And so then, then you rely on their skills and their ability to say, hey, look, maybe this one loan isn't the best for you in your scenario when we've gotten into it, but I've got all these other things that'll be perfect for you and we can get you in a deal. So I think those are always the big ones. And I think tech, but tech far and away. It's
Yeah.
where we're all
Yeah.
going.
Yeah, for sure. And like from the having the niche products, it's like the loan officers have faced so much headwinds over the last 3 years. If it takes knowing they have a product that they can call on once a year, it just gives them more
So
confidence.
full disclosure on that, I've had to get better at that because, being the one that builds those things and finds them and does all the investor stuff, every time someone comes to you and says, I want that product that you may do one loan, you're like, oh no. But then you look at it and say, hey, you know what? Let's do it. Let's get it out. It's a retention tool. And then it's ultimately probably not going to be what they close, but it's going to be what
Yeah.
gets them the loan that they do. So, yeah.
And when they're upset with you're looking at recruiting when they're upset with their company that doesn't ever seem to introduce niche products and you roll out that you have a niche product, it gets you some attention as
That
well.
that too, that as well. Hey, what do we say? Eliminate excuses. So just, hey, you got them all. Go get them.
You've been playing whack-a-mole for the last 3 years.
Woo. Oh,
It's
the
going to get
last.
better. Hang in there, Derek.
So I keep telling myself, come on.
Brad, every lender wants to know what is on their partners' roadmaps finishing out 2025 and going into 2026. So a similar question for you. What is DPR's roadmap for the upcoming months?
Yeah, appreciate that. So we're going to continue to expand our services and enhance our partner platform. So we're figuring out, creative, thoughtful integrations with more LOS, PPE, POS, and CRM, housing counselors, home buyer education, mortgage insurance platforms, things like that. So we're being really thoughtful about who we partner with for that. Enhanced analytics, so we can provide hopefully a lot better data and clear information around pull through and pipeline insights for lenders. We have a goal to continue to build smarter systems and processes internally. So because we keep getting more programs, they get more complex and things like that. So we want to make sure that that's really our IP, and a lot of what we do is we manually have to do all of this. So we need better and faster, easier ways to do that. And then finally, that A word. So, we're going to be really honing in on some research we've already been doing around AI enabled, coaching support tools, things like that, so that we can help, maximize the full power of our platform and lead consumers more quickly to better understand DPA options and how to use them, lenders too. So it's a
That
lot.
is awesome. That is. You guys, you're both going to be extremely busy, but very important for the industry. So that's a wrap. So a huge thank you to Down Payment Resource for sponsoring today's episode. Brad and Derek, you've both been so thoughtful and insightful. Thank you for your contributions. And to our
Thanks
listeners,
for having
thank
us.
you for tuning in. Your curiosity and engagement or keeps our community moving forward. We'll be back next week on Tuesday, August the 26th. Hard to believe that I'm saying that, at 2 p.m. Eastern for the network, and then 4 p.m. Eastern on LinkedIn for the broader industry. If you found this information valuable, we are only 3 weeks from Boston's conference. So make sure if you're a member, you get registered. If you're not a member of the Mortgage Collaborative, please reach out and I'd be happy to share all the benefits that we offer so that you too can go to Boston, go to Cheers, go to a baseball game and have a lot of fun. And at the same time, learn a lot about the industry and collaborate with others. So cheers, and we will see you all on the next step. Thank you both.
Thank
Thanks,
y'all.
guys. Appreciate it.